All right, let's get right into it. You've probably heard the term private equity thrown around, right? It sounds super complicated, maybe something only for Wall Street insiders. But what if I told you the big idea behind it is actually something you already get? We're going to pull back the curtain on this whole billion-dollar world. Just think about this for a second. Imagine you had the cash and the vision to buy an entire business, maybe one that's kind of struggling, and you could go in, turn it all around, and then sell it for a massive profit. Sounds pretty cool, right? Well, that exact idea, that's the engine driving the entire private equity industry. The whole playbook honestly boils down to these three simple words: buy, improve, sell. That's it. This is the fundamental DNA of pretty much every private equity deal. Remember this, because it's the key to everything else we're about to talk about. So, what's the official definition? Well, private equity is just a type of investment where these huge funds buy companies. But there's one massive catch, and it's right there in the name. The important word isn't equity, it's private. And believe me, that word private changes everything. We're not talking about companies like Apple or Amazon where you can just buy a share on your phone. Nope. These are businesses that are owned completely away from the public stock market. And that is a huge advantage. It means they don't have to worry about hitting quarterly profit numbers or what thousands of shareholders think. It gives the owners the freedom to make big, bold, long-term changes without stressing about the daily stock price. So how does one of these deals actually go down from start to finish? Well, it's not magic. It's a very clear, methodical process. You can really think of it as a four-step playbook that pretty much every firm follows. Okay, step one, raise the money. PE firms get these massive piles of cash from investors like pension funds, the retirement money for teachers and firefighters. With that war chest, they go hunting for a company to buy, usually one that has a ton of potential but is maybe being held back by something. Then comes the improve stage, and this is where the real work happens. They might bring in a whole new management team, totally overhaul how the company makes and ships its products, or invest in new tech. And then after maybe 3 to 7 years, it's time for the final step. They sell it. And hopefully they sell it for a lot more than they paid. That difference, that's their profit. Now, if all of that still sounds a little abstract, don't worry. I've got the perfect analogy that's going to make it all click. Let's forget about finance for a minute and think about something you've probably seen on TV a bunch of times. I mean, just look at this. It's the exact same logic. With house flipping, you buy a rundown property, you fix it up, you add value, and you sell it for more than you put in. Private equity does the exact same thing, just on a much bigger scale. They buy a struggling company, they renovate its operations and strategy, and then they flip it for a profit. It's really that simple. It's just company flipping. Okay, so we know how it works, but so what? Why should you even care? Well, because these deals don't happen in a bubble. They have a huge impact on our jobs, the things we buy, and the economy as a whole. And this process, it's a real double-edged sword. On one hand, a private equity buyout can be a lifeline. It can save a company that's about to go bankrupt and help it grow. But on the other hand, that push for efficiency often leads to really tough decisions. We're talking about layoffs, selling off parts of the business, or other huge, sometimes painful changes for the people who work there. It's an incredibly powerful force with some amazing success stories and some pretty controversial outcomes. And all of that brings us right back to where we began. If you take away just one thing from all this, let it be this simple formula. This is the heart of this entire multi-billion-dollar industry. It all comes down to buying, improving, and selling. So the next time you hear that term private equity, you don't need to feel intimidated. You can just cut through all the jargon with one simple thought. It's not some crazy financial magic. At the end of the day, it's just flipping companies instead of houses.